All right, guys, how's it going today? It's time for another lesson in technical analysis. So today I want to go over trading divergences, right? So I made a little bit of some notes here, just kind of go over what divergence is and how we can use it to improve our trading entries and exits, okay? So first things first, what is divergence, right? So basically what it is divergence is when the price of an asset is moving in the opposite direction of one of the technical indicators that you might use, whether it be, stochastics, RSI, MACD, etc. Okay. Or is moving contrary to other data, right? So what divergence does is it warns us that the current price trend might be weakening, right? Okay. In some cases may lead to the price changing direction, right? So divergences are really good for spotting potential reversals, right? And I should add that in here as a note. Useful for spotting potential reversals, okay? So it indicates changing momentum in the movement, right? Okay, whether that's up or down, okay? So there's positive and negative divergences, okay? So positive divergence or bullish divergence indicates a move higher in the price of the asset might be possible, right? And negative divergence is just the opposite, or bearish divergence, signals that a move lower in the asset is possible after moving up, right? So here is, I just have like a couple of pictures that I inserted in here. Bearish divergence, so you can see on the top left of that first image, the price on the chart is making higher highs, but the indicator is making lower highs, right? Possibly indicating that upside momentum is slowing down and we might be reversing to the downside, okay? Now, this stuff works even better in confluence with other things like, trend lines, resistance levels, Fibonacci extensions, etc., okay? Bullish divergence on the top right here, you can see prices making lower lows, but the indicator is making higher lows, okay? Now, in a second here, I'm going to go over to the charts and come up with some actual real examples in real time for you, okay? And the bottom one's just a similar setup, right? Except for the bottom one, on the bottom left, you have a slightly different setup. So the price is making a higher low, and the indicator is making a lower low. And that is actually bullish, right? So if RSI is making a lower low and the price is making a higher low, it's technically bullish, right? I don't use that one as much, but that is one that some people use. Conversely, on the bottom right, you have the same thing with the bearish divergence. If you're short, it's just kind of extra confirmation if the price is making a lower high and the indicator like RSI is making a higher high, okay? Again, I don't really use that one that much. I use those top two the most. But let's come on over here to the NASDAQ. And this is actually one that I used on Friday, okay? And a few people were asking me what my trigger for long was. And you can see we got a move from this 13,900 area up to the 14,100 area, okay? So as you can see, from the open basically, and this was OPEX Friday, hit our heads on 14,200 multiple times, and this was actually the VWAP too. So that's another indicator, marker that you can use on the chart. And we were just grinding lower and lower and lower all day long, okay? And price is making lower lows. And then let's pull up the RSI here. Okay. So, you look at the price here making lower lows, and then you look at RSI down here, you have a low here and then a higher low here, right? And then an even higher low here, right? So, and this is this was kind of like a no-brainer entry for me, because this also coincided with that 13,900 price level that I was already looking for anyways. So, I pulled the trigger on this one, and we rode this long basically all the way up to, this is the 200 period moving average on the 3-minute chart. And I use this all the time on an intraday basis for entries and exits, right? And a lot of times, especially if we're bearish and we're trending down, and you're either long and you're looking for an exit, or you're looking for an entry on short, price tends to get rejected when coming from the underside of this level. Okay, so that's exactly what we did, right? So we saw this bearish, or this bullish divergence here on the RSI, and we had this NASDAQ coming up to the support level here. We took it here, and then our target was that 200 period moving average, and you can see it almost perfectly rejected from that, right? So that's, if that was the only trade you took all day, that was a great trade, right? With one MNQ, you're talking about 200 points. That's about $400 just for one micro NASDAQ futures contract. So not too bad. Let's head on over to oil. And these can obviously be used on larger time frames as well. So let's take a look at the weekly. Okay, so this is an example of negative or bearish divergence, right? Okay, so you can see here on the RSI, we're making lower highs, right? Okay, so you look at the chart, you're making a higher high, higher high, higher high, another higher high, right? And we actually took a short last week, okay? And crude really has not broken down yet. I don't expect too much more upside, but with all this Russia news going on, I think that could help prop this thing up a little bit more. But you see, we had an extra confluence of entry here on the short, because we were hitting this trend line here, right? So, you don't only want to use the divergence when you're entering and exiting these positions, right? If you have divergence and you have, like I said, a trend line or a support level or resistance level or a Fibonacci extension, right? That gives you a little added confluence, right? So we took the short, what the heck? Okay. So we took the short here, and really I was just looking for a retrace back to this 20 period moving average, and that's exactly what we got. I think we took it at about the 94 level and wrote it down to 90 and got out, and that was really a pretty good exit, because we have not broken down much from that. I was kind of thinking we might retest this old high, but so far we have not. Now just curious here, was there... Okay, yeah, so you also could have used a Fibonacci here too, right? So oh, come on. So the 1272 was right around this 91 area. We actually overshot that a little bit, so not a perfect entry on the Fibonacci, but you can see it almost perfectly hit that trend line and has been proven to be a little bit of at least a barrier that kind of has been slowing it down. Not a hard rejection like it has been in the past, but it's slowed it down, right? And this can also work on not just RSI, but also MACD as well, right? So let's pull up the weekly here. So same thing. You can see the MACD made a slightly lower high here, and then here, actually the MACD here is actually making a higher high than this one. So not perfect divergence here on that one, but you get the point what I'm trying to say here. Let's take a look at one more thing. Bitcoin, I know we had some bullish divergence on that one not too long ago. And that one kind of had like a delayed play out. But so you have price up here in this 47K area, and then it made a lower low here in this 35K area. And then you look at the MACD, it made a low here, and then when Bitcoin was at that 35K area, it made a slightly higher low here, and that provided a good bounce, right? Okay, so that gave us a bounce from about this 35K level to almost 46K, Okay, so that would have been a nice entry on longs there. Okay. Yeah, so I mean that's basically all there is to it on divergence. I want to keep it nice and simple for you guys. If you have any questions, any further questions on divergences, please let me know in the comment section, or head on over to the Discord and ask in the Discord server. Cats and I and a couple other guys are be happy to answer any questions that you might have. But yeah, that's it, guys. Have a good day.